elevation. Cool and Dre. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, YouTube? I'm back. Welcome to Goofy Investing, where we talk about investing in the stock market. This is a channel tailored towards the growth investor for the growth investor. We're going to be covering a stock that's very special. This is one I've been positioning in pretty heavily, all right? Ticker is S, Sentinel 1. S on my chest. There can only be one. S1. All right. So let's get into it. We're going to talk about the stock. We're going to talk about the business. We're going to talk about different angles of the investment and so forth. All right. So trades on the New York Stock Exchange for $13.12 a share. Market cap is currently $4.46 billion. What is the company and where are they headquartered? Or what does the company do and where are they headquartered? All right. So they are headquartered in Mountain View, California. This is a cybersecurity company that is an artificial intelligence cybersecurity company that is a cloud-based infrastructure. All right. Established and founded in 2013. They got about 2,900 employees. Okay. So let's talk about the quant first, and then we'll get into some other things. With the traditions of the channel, we'll do a sniff check on their balance sheet because that's the first thing we look at, all right? 10.34 million in debt, 649.85 million in cash. Huge net cash position. Monster balance sheet. That puts their enterprise value at 3.82 billion. Keep in mind, the enterprise value is the debt subtracted by the cash, what have you, all right? It's the difference. So when you buy a company or a share of stock within the business, you're also buying the cash per share in that business as well, all right? So there's that to consider. Let's look at some financial metrics because the stock is going down, all right? Price action on historicals. They IPO'd here in 2021. Stock is down 70.5% from IPO. On the year, it's down 35.5%, and then year to date, 12.5%. So for all intents and purposes on the stock chart, it's kind of on long-term free fall, if you will, all right? But that doesn't necessarily mean anything, all right? You see, the price is what you pay and the value is what you get, guys, all right? So let's talk about, or actually first, when is the last time that this stock traded this cheap? If we go back to historicals, the stock hit these levels in the middle of 2023, okay? So let's look at what the company has done thus far, all right? Moving to the income statement, I'll go to an annualized basis. In 2023, it looks like they were doing 422 million in sales. They have doubled sales since then, 955 million. Company is guided that they're going to reach the billion mark here at the end of the year for Q4 based on their earnings call. Now, since the actual documentation of their sales going back to historicals, 2020 they did 46.5 million in sales, all the way up to today 955 million. I'll pull out my handy dandy calculator. All right, oops, bear with me. So if they're at 955 million in sales and they did 46.5 million in sales about 5-6 years ago, they have 20x sales. This is a growing business, all right? I cannot emphasize that more, all right? Exceptional, strong management execution on sales growth and making this a bigger company, all right? So let's go down and take a look at some other metrics. Dilution is, it's happening, but, you know, I believe that with more profitability and more scale, eventually dilution will stall. Okay. Let's go to the balance sheet. All right. Let's look at their actual balance sheet. So cash is going down. Okay, I'll admit it. They had a high here in Jan 2024 of 926 million. Now they have 659 or 650 million ish. Okay, in cash. Debt, debt is going down though. All right, and my whole thing is such little amount of debt they might as well just pay that off. All right, that's my whole little pet peeve. But all in all, balance sheet is a monster. Okay, so why did cash go down? We have to look at it like that. We have to justify that. Why did the cash go down? Well, if they had 810 million in cash their last quarter and they reported cash went down, that how do you say 175 mil or what have you? Where was that from and where did the cash go? All right. Well, they actually made two minor acquisitions of both Observo AI and Prompt Security. Okay. And they closed on these transactions, thus hitting the balance sheet. All right. And the Observo and Prompt Security AI and these minor acquisitions serve as a complementary to the Singularity platform, their whole product offering. Okay, this is not just a cybersecurity company that's competing with the likes of CrowdStrike in AI cloud, so forth, or AI cloud cybersecurity. They're creating a whole one-stop shop of data analytical AI native telemetry pipeline management within. All right. And with the actual portion of that actual acquisition, this makes the business offering or product offering more agile. It's going to have faster response time. It's going to complement the whole service. This whole flywheel business model is a beautiful thing that I like to see. Okay. So going to their earnings call, okay, here it is. They purchased the price of Observo AI 225 million. They finalized and closed both Observo and Prompt Security transactions in Q3. Guidance, okay, end of year guidance for fiscal year 26. They're going to do that billion in revenue. That's that magical number, all right? That's 22% growth year over year. And they're actually, we'll see in Q4 what they're going to be guiding and for next year's guidance, okay? Analyst consensus estimates for growth, all right? So consensus estimates got them growing double digits for the eye can see out 9-10 years, okay? That's what I like to see. Whether these are going to be accurate or not, I doubt they're accurate, but I've included it as in some of my price targeting, which we'll go over in a bit here. All right. So let's talk about earnings and how it went. I'll be transparent. The street didn't like earnings, and I'll tell you why. All right. Transition between CFO. Okay. So CFO transition. Bear with me. I will pull it up. All right. So old CFO is out. Current CFO is interim. All right. Barbara is going to be, going out. She's the old CFO, but the chief growth officer, Barry Paget, will serve interim. Whenever you have a growth officer filling interim as the CFO, the street is automatically going to perceive that margin expansion is not at the uppermost of that CFO's mind. So what's going to happen in the street, they love margins. So if they see some margins slow down on the expansion or they see some compression of margins, stock's going to go down, okay? That means less profitability and more focus center on growth, all right? So there's that. Yet to be received, the new CFO officer of this company. So the leadership is in a transitionary period. Whenever there's a transition in leadership, comes uncertainty. Whenever there comes uncertainty, market doesn't like it. So equity is going to take a hit. And when the equity takes a hit, opportunity to come to the investor, okay? So let's look at the actual street ratings here, all right? And I'll tell you what I think about them. We'll go to the Wall Street ratings, and actually, if you can see, there is a ton of analysts covering this stock. So heavy Wall Street analyst presence, magnifying glass, if you will. All right. So, excuse me, I'm a little under the weather. So average consensus estimates got the price target at $20.71 by the end of the year. I disagree, okay? And I'll admit, I disagree on the downside. I think stock's going to probably trade flat the rest of the year, guys, okay? Um, quick disclosure, I am a shareholder in this company. I've been buying this very heavily. I hold 4,100 shares. Cost base is $14.15 a share. I've invested over a little over 58 grand thus far. I intend to make this a six-figure position. This will be a core position in my growth portfolio. All right. My share target is 10,000 shares. All right. So what I'm doing is I'm actually assessing the actual buy window or the amount of time I have to buy the equity, and then I'm calculating out my price targets. Okay. Let's look at where let's look on a valuation basis compared to competitors, and then I'll get into my price targets. Okay, guys. So, excuse me. So, on an actual valuation basis, I pulled out most of the cybersecurity company competitors, CrowdStrike, Zscalers, Palo Alto, Fortinet, etc. Okay, so um, as you can see here, price to sales and EV to sales are multiples or fractions below competitors that they're dealing with. Okay, and with that, I'm going to look at the valuation from a market multiple comparison, and then I'm going to go to look at their growth. Companies growing faster than the other companies, and it's trading the cheapest. Okay, I am a growth investor. I see value in this business model. This business model is going to command high premium multiples due to their free cash flow margin, and this business model that's going to be set to be a cash cow in the future. Okay, the way I see S is I'm buying the business as it's under construction. Their actual minor acquisitions are complementary to their actual main product offering to make them more competitive than CrowdStrike and so forth. All right. So I'm buying the business while it's under construction, even down to the management team changeover of the CFO. And so that way, as my position is set, as the company is under construction, we'll be ready to rock and roll and run. All right. So with that, I reiterate, stocks. I got the stock trading flat around this $13 price target range, probably until the end of the year, and then the run to start next year. Okay, which gives me more confidence to make this a scale play. And I'll talk more about that confidence here in a bit. But let's get into price targeting. Okay. On base case estimates, I've pretty much got it close to consensus analyst estimates. In 5 years, I got them doing 2.474 billion in revenue, and I got margins of 5 to 7% net income margin on a GAAP profitable basis. And I also have for my share count on dilution target, I got the shares landing at 1.87 current shares or times current shares. And that's in comparison with their last 5 year CAGR of share issuance, 611.11 shares. Okay. On the bottom of the base case, on a 5 year target, $50 a share. We'll pull out my handy dandy calculator. Let's say stock is trading at with my price target of $50. Let's say the stock is trading at $13 right now. In 5 years, that's a 3.84x minimum on the base case, on the low side. All right. On the high side, I got $84 a share. On the high side, I got this 6xing and a half in 5 years. All right. Talk about the bull case, which I think is really going to play out due to my tailwind thesis, which, by the way, you're not going to find anywhere else except my Patreon. I think stock's going to be $100 3 to 5 years from now, guys. All right. So at $100 and we divide by current share price, it's over a 7.5x. Not too shabby, and that $100 is on more so on the low side on that 5-year target. But Goofy, you're crazy with these crazy high PE multiples on the projections. No, I'm not. No, I'm not. On a market multiple comparison with their actual business model margin profile and their tech SaaS business model, where Rule of 40, where the tech SaaS triangle rules apply, company is going to command some crazy multiples. All right. Okay. So there's that. Why? How am I confident in being able to make this a scale play and putting so much capital in it? Well, their monster balance sheet. Okay, guys, the balance sheet says a lot. All right. This is enough cash runway to make them profitable and then some. All right. So I don't have to worry about that. All right. So possibility of bankruptcy is 1% out of 100. All right. How do we get to under 1% bankruptcy to where it's non-existent, impossible, or likely? Okay. Well, I'll tell you how. Okay. So right now they have achieved authorization of GovRamp and so forth. So GovRamp is pretty much a credential to where they can bid on government contracts. All right. They're already in the public sector with some cities and states. But I'm looking more towards militarized military contracts on the infrastructure, which would make them national security essential, which means that the government will just not let them go bankrupt, okay, for the sake of national security and the taxpayer dollar. All right. So that's what I got. All right. S on my chest. There can only be one. All right. If you're getting value out of this video, like and subscribe. Check out my Patreon. Get access to my deep dive collection where you get exclusive research and so forth with a suite of products that you can hold in perpetuity, included in the price of your membership. You can download them to your desktop. That includes price targeting, research data, and so forth. All right. Get more direct access to me. I'm always posting more videos and giving the latest and greatest. In fact, on my Patreon in about 8 hours, I'm announcing another play that I'm going to make. All right. You know, be with a community of like-minded investors. There's a lot of high caliber growth investors on there. You get access to all my buy and sell alerts as I'm doing them and so forth. I've recently opened up a new tier to the Patreon. For the longest time I've been sold out, but $14.99 a month, you really can't beat it. If you pay the annual option, you get 20% off. Check out a free trial on the house just to see if this is your cup of tea. If it's not, okay, just cancel it and you won't get charged. No harm, no foul. All right. So that's what I got for S on my chest. I hope you guys got value. Thank you all for your patience, within this little transitionary time where I had some technical issues with software editing and so forth. With that being said, I love y'all and take it easy.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.